a few things are happening here. So since September of last year, 1 year later, the Fed has now reduced rates by 125 basis points.
Yep.
And that brings us to 4.25, 4 to 4.25. The Fed, no doubt, will go to a neutral rate, which is 3%. So they have 125 basis points to go. So they're only at their halfway mark. So that's the first thing.
Yep.
They've only eased one time this year, but they have a lot more to go because jobs are slowing. And more importantly, the neutral rate is much lower than the rate we have today. And that's actually restrictive for a lot of the cohorts that need lower rates. The housing market, the construction market, a lot of the mid-sized businesses all thrive in lower rates, and this restrictive rate structure that we have here is actually holding back economic growth. So despite a 3.3% GDP growth last quarter and what's expected this quarter, jobs are weakening, and with that weakness in jobs, despite higher inflation, the Fed is now embarked upon an easing cycle that will last for some time.
Okay. Is Powell doing a good job right now? I want to get your take on that. And who's his successor going to be? And the question everybody's asking is, are we going to see QE from the next Fed chair?
Powell did a poor job at the front end because of the transitory inflation stance that he took that allowed inflation to run late, very high.
Is he behind the curve now?
And they raised rates 525 basis points in a very short period of time. And he's a bit behind the curve now because the neutral rate should be 3. He's been a bit stubborn. He's been a bit late. And so jobs have been weak. And he now feels the pressure that he can't let this slip away. Despite the economy running well, it's not running hot. Despite it running well, he sees signs on the horizon that the economy may weaken if he leaves rates restrictive, which they've been. And so the next, as you mentioned, the next Fed chair is coming into place next May, which is less than 8 months from now. And 8 months from now, you'll have a Dove take that office as the next Fed chair. They're going to bring rates almost immediately down to the neutral rate of 3. But I believe it goes more than that because 8 out of the last 14 times, and this is really important, that the Fed has lowered rates by 100 basis points or more, and that's happened over the last 60 years, 14 times. 8 out of those 14 times, longer rates have actually risen. And what we've seen right now, since the Fed cut last week, which is September 17th, we've seen long rates actually move up, the 10-year rates move up. So I think the next Fed chair is going to do probably QE with a twist, and the twist is buying longer-term treasuries to bring those rates down, which will be stimulative to the economy, because long rates being higher is not productive for the economy. Take a look at the housing market, for instance. The average housing mortgage rate in the United States is 6.4% today.
Yep.
The average housing mortgage that exists today is 4.1%. So that 230 basis points gap is golden handcuffs for a lot of homeowners that don't feel the incentive to be able to move because mortgage rates are too high for whatever they buy and doesn't provide incentive for those that want to buy. And so housing activity, construction activity is too restrictive right now with rates where they are. And so there's a lot of pressure on the Fed.